Welcome everyone. All right, before we begin the presentation, just want to remind you that this presentation is not financial advice, and I am not a financial advisor. So anything that you learn from this video, from my indicators, or from any ideas I share, your trades and your trades alone. And with that, let's begin. So I did 2 videos about what's new in the ATR levels and the pivot ribbon since last year. And, some of the big things are there's additional levels, which are incredibly useful for scalping and day trading for entries and exits. And, of course, time warp, which is super useful for having trend on a higher time frame while surgically entering on a lower time frame. So I want to dive a little bit deeper into those because I think right now in the environment that we're in, swinging is fine. There's opportunities to swing, and as VIX starts to get below 20, it becomes a little bit more attractive to swing things, but market's still trying to figure out what it's doing. You've got on higher time frames, structure trying to change, and of course EMA is starting to flip over, but that's no guarantee of anything. So I've been scalping and day trading a lot more in the last couple months. I have been swinging a little bit, ExxonMobil, Moderna, Tesla, things like that, but scalping has been something I've been doing a lot of, particularly SPX and SPY. So SPX, I've been trading a lot of 0DT. SPY, I've been trading a lot of 1DT. There's a ton of risk there, so you still got to get really, really good with the execution. The gains look great, and the percentage gains look great, especially when you see them on Twitter. But there's a tremendous amount of execution skill that's required in order to trade these effectively. And as I generally suggest people, if you're still working on execution, focus on 10-minute and maybe SPY 2 to 4DT or even further if you need to. Give yourself some time to learn how to execute, and then of course you can get more surgical with things. And once you get surgical and you have proper strategy for entering and exiting these scalps or these day trades, you can figure out ways that you can perhaps improve the margins for yourself. But let's talk about scalping and day trading, SPX and SPY with time warp. So today we'll discuss 3 things. I'll talk about scalping SPX using day levels with the 1-3 time warp. I'll talk about precision scalping SPX, scalp levels with the 1-minute, 3-minute time warp on Thinkorswim. Not available on TradingView, but you'll see with the first example, you may not need it, or you shouldn't feel like you need it. And then we'll talk about day trading SPY using day levels with the 310 time warp. And of course, you can play around with things however you want. These are just suggestions, and I've really been enjoying the 1-3. I really didn't use the 1-minute too much in the past, a little bit with SPX, but not very often. But now I've been using it a lot more with this 1-3 combo. I find that 3-minute trend is so valuable for SPX, so being able to be really surgical with entries and exits has helped tremendously for me. And of course, day trading SPY, 310 to 10 minutes bread and butter for me. When I'm day trading. So 310 allows me to have surgical entries on a day trade and hold with a 10-minute ribbon. Let's walk through these examples real quick. All right, so we've got scalping SPX using day levels with the 1-3 time warp. So this is what it looks like. You got 1-minute candles. You got 3-minute trend. You can always tell when it's time warped. It looks like an alligator. So this is the these are the day levels in the afternoon. Now, you can use these levels especially in the afternoon, but you can use them all day. It doesn't matter. But in the afternoon, these new levels really allow for kind of more fidelity with your targets. So let's say you go the next level below, right? So this is 4083, right? And we want to scalp 4080 calls. So 4080 is right here. This is actually resistance yesterday. So if you had, entered in, let's say, so this is us recovering the ribbon, testing it, and then finally, we recover and we continue, right? On this entry right here, and you should always wait for a pullback, right? If it's starting to go away from you, especially if it's SPX 0DT, you do not want to start chasing these. If you chase up here, let's say it's going away from me, right? And it's breaking out above this resistance. And you can certainly scalp that, but if you don't exit, right, and it comes back down here, you're probably going to lose, could lose 50% of your premiums just off the bat. And, if you do have a stop and it's too tight, let's say 30 or even 50% on SPX or DT, it'll take you out of the trade, right? And so, this entry on the 3-minute 13 EMA is actually pretty optimal, right? You can use, let's say, the 34 or this call trigger as risk, right? You could have even done it here too. This would have worked too, for a short scalp, but short-term scalp. But if you take this entry here at the 13, or even here, it doesn't matter, and you hold it all the way to the next level, that's a really, 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 really decent move, right? You can see it. I'll show you the premium chart in a second too. So, these are 40-80 calls, and let's look back at the time. So let's say we got in at this entry right here. It's about just after 2. And if we're looking at the premium chart, just after 2. So let's say we got in at about $5, and that move up to the mid-range, that's a $3 move. So $300 per contract, almost 50% on in these are 1-minute candles. So in like 10 minutes, right? 50%, more than 50%. So if you entered, let's say at this 2 p.m., just after 2 p.m., right, at this 13 EMA, and we look at it, you'll see, just after 2 p.m., we sort of hit this low. It's about $4.50. But let's say you enter it at $5, right? $5 goes to about $8. See that here, right? It's about $8. And that's a perfectly great scalp, right? You could have taken it from there to there. Now, if you had entered on the prior, so if you had entered on this candle here, right, and you held it all the way through because it didn't break the 13 or break and hold the 13 below the 13, that would have been, what time was that? Yeah, 150. So that would have been roughly here. So you'd entered, 450. So same entry. That's theta burn that you're seeing, especially in these downside moves. You would have gotten 450, would have held, no real loss on this retracement if you decided to hold it and you wanted to get a bigger gain, and then you could have exited for over 50%, right? So and that if you had bought here, that's about 20 minutes. If you bought here, it's about 10 minutes. Of course, if you decided to hold through this consolidation, since you are in the money at that point with the 40-80s, right, you can hold it as long as it doesn't break, let's say the 13 EMA, or as long as it doesn't break 40-80. You would continue to accumulate premium on this all the way up to $10. On the high end. Let's see. Let's say we scaled out at this next level up, which actually would have been a great scale out. Let's say 40-90, and that happened at just after 3 o'clock, right? So looking just after 3 o'clock, you're talking about $14, $15 premiums. And we got in at $4.50 or $5 or even $6. I mean, let's say you missed it, just by a hair, and you're in $5.50 or whatever. That's fine, right? From $5 to more than 100%, in the course of just a couple hours. So these levels on day mode with the 1-3, you can get surgical entries at the 13 EMA between the 8 and 13. Or even down to the 21, perfectly fine. That's fine too. Again, this is up to you. It's a style thing more than anything. But the good guideline is if you get those entries in the 8-13 in trend, usually it'll be fine. When you get super extended like this, though, that's not an entry, right? That's a pullback, and it's likely if you cannot. That's a deep retracement or sell off, and it's likely that if you do not recover it successfully. Here it would have been fine. You could have scalped to here, but then that was resistance. That's short scalp. It's fine. You don't want to be buying in here after a deep pullback like that. Wait for it to recover the 13, and then consider entering above a breakout of resistance. But this is this is the end of the day, and of course we had that massive sell off towards the end of the day, almost 20 points. And the reason for that is bulls are taking their profit into the weekend. They don't want to hold on, especially after a monster week. So this was sort of anticipated, and we'll talk about there was a downside trade here too, right? You could have traded to 40.75. So again, looking at the next level down, what's the closest strike, $5 strike, just above or below? So if it's puts, you want it to be above. If it's calls, you want it to be below. So in this case, 40.83, 40.80 calls were the ones to take. And if you wanted to go higher, then 40.90 would have been the next one up. But 40.80s were good. 40.90s would have worked as well in this case. You don't want to go too far out, especially with SPX end of day, far out of the money. If it's too far out of the money, you will you'll be in in serious trouble with theta if it doesn't go your direction. Now, if it goes your direction, of course, that can be, thousands of percent, but it's better to be strategic with your strike selection. And of course, ATR levels can provide you, these day levels can provide you with targets. So you should use those to your advantage. So this downside move, 40.75s would have worked, 40.80s could have worked, 40.85s could have worked. Any of those would have been fine. And I think, we'll talk about it, but I think 40.75s, which were the optimal scalp selection, went from like 25 cents to bonkers. We'll go through that in a second. But yeah, so you can see there's surgical entries and exits with the ribbon. There's surgical entries with the ribbon, surgical exits with these levels. These extra levels help a bunch, these extra Fibonacci levels, and allows you to really get nice entries. So definitely backtest it using on demand, using replay on TradingView, and take a look at how things move. Try to understand how the premiums move relative to it before you try anything. Definitely practice. You want to get a sense of how things move relative to the ribbon, especially with a 1 minute time frame. Things can be dramatic. So definitely practice that and take a look at it before you try anything out. But that's how I trade SPX using day levels. So let's talk about, and this is the premium chart that we were just discussing. So I have premium charts for everything, so you can kind of see how things flow based on the selections that I would pick with the chart. So this is the same thing, same price action. It's the same 1 minute, 3 minute time frame. The only difference here is now this is for Thinkorswim users. These are scalp levels, and often you'll find yourself in this trigger box at the end of the day. This is the afternoon trigger box. So the trigger box works on all modes. It's essentially, if you ever hear me talking about it, the trigger box is the box that's formed between the call trigger and the put trigger, or the long trigger and the short trigger if I'm using higher modes. Excuse me. And so, often you'll find us in this trigger box, and it's fine. Once we broke above this previous close, that was nice. We're holding it. Broke above trend, but you can get real surgical with these entries here, right? So this is the call trigger for the afternoon in scalp levels if you have them. And once we held we went above the call trigger, we're holding the ribbon, pretty good, right? You can take this entry with the risk being that maybe it rejects the call trigger and you'll have to close it here. But let's say you're taking 40.85s or 40.90s. Those would have been fine. You can see that they're slightly surgical, a little bit more surgical with the strikes that you can select. So this is intermediate between the 40.90 that we had before and the 40.80 that we were talking about. So there's ways that you can, especially end of day, this is super useful, right? You can see where exactly we topped out. This is the mid-range on scalp levels. It's almost like, not perfect, but it's pretty close, right? Lots of resistance there, 5 candles before we break down. That's a first sign that, hey, people are probably starting to exit positions in the market. This was just a little move up, but it basically put in a lower high. Once that happened, that was actually a good opportunity to take a downside scalp. And if you were watching if you're watching the levels, you could have taken 485s, you could have taken 480s, which was a previous resistance. You could have done 475s, right? 470s or 475s, right? Just above this 4070 level, 471 level would have been 475s. And so let's talk about that, right? If we're going to get a massive sell-off and we're taking, let's say, puts at the break of this call trigger, break of this 4080 MA, after putting in a lower high, what does that look like? Well, it looks like this. And let's look at the exact time. So I'm looking at about 347, right? So 347, we're at 75 cents, and of course you could have gotten it as low as 15. You may not have known that it was going to reverse like that, of course, but and maybe at that point 40.75s are too far away, but reasonably at 75 cents. Generally, when I'm playing end of day SPX, I've already made profit, so if I'm going to trade it at all, it's very high risk. It's basically, I assume that it's going to go to zero. But I try to be, smart about entries and using the levels in the ribbon to determine whether or not I think it's going to head in a particular direction. And of course, price action. But let's say you got them at 75 cents. They closed $5.91. So that's a massive, massive move. So $75 gets you almost $600. And of course, there were scale outs along the way. Now, this doesn't happen all the time. That was just happened to be a pretty amazing trade. And of course, if you got 4080s, it was even more, or 4085s, it would be even more than that. So, yeah, I mean, this is just showing you a really, really great example of how you can use scalp levels. And again, these levels are just ideas. These trigger levels are just ideas. They are still just support and resistance. Break down the 8, the 13, the 21, the 34, the call level. I mean, this is just, okay, and it's not stopping. So at that point, entering in at 75 cents on maybe it pulls back a little bit, you get in at 75 cents. Or even $1, you turn $1 into $5, right? If you exit at the put trigger, or even if you exited at the previous close, which would have been the 1 p.m. 12:59 p.m. close, you still would have been in really, really, really good shape. You still would have been $2.50. You still would have made over 100% on the contract from just here to here, level to level. So really super nice. Again, you don't need them. I'll show you again. This is the day levels. You could have done it here as well. Break of this level, so continuous break and same EMA. But now roughly at the call trigger for the scalp levels, you have this 38.2 level, right? Break of 38.2. So it's breaking down so many supports. And of course you can get the pullback and exit at 40.75, right? For an in the money move. And that would have brought you to $5. So, I hope I'm showing you, anybody on TradingView who's freaking out that they don't have scalp levels, you don't need it. Certainly these short levels can help a lot when you're just doing surgical scalps and you don't want to really be holding on to something for very long. It provides you, and particularly at the end of the day as the premiums move very efficiently, if it goes in your direction, it provides you really nice surgical entries and exits. All right, so let's talk about day trading SPY. So the same chart, 3 different ways with various different trades on them. But here's the SPY chart with a 3:10 time warp. So it's on a 3-minute time frame and a 10-minute time warp. So this is a 10-minute ribbon. And let's say it was basing at the and these are day levels, basing at the put trigger, and we got a conviction error of firing showing that we did a 1348 crossover. Never mind these 4. That's just shown because the Thinkorswim shows you as many as the division between the two. So 10 over 3 is slightly over 3, so it gives you 4 arrows. TradingView will only show you 1 arrow, which I think is actually better. I haven't figured out how to change that, but don't worry about the 4 arrows. Basically, just assume that the crossover happened and it's continuing up. So we got the crossover, pull back to the ribbon. You could have bought calls here. This is perfectly fine after 3 minutes. Or you could have bought calls on the break of the opening range, right? The 10-minute, 9-minute range. Perfectly fine. Use the ribbon as your risk, right? You can use the 8, if it came back to the 8 I probably wouldn't use the 8 or the 13, but you could use the 21 or the 34 or the 48, or you could use the put trigger, right? Or you could use the low of the day, the pre-market low, right? So any of those will work. And again, the risk, the stop, it should be related to your risk, your contract, your sizing, all those things. There's no definitive way to do this. It's very much based on how you set up the trade from a logistical standpoint, and of course from an execution standpoint with your entries. But assuming you entered here, there are plenty of opportunities to use various different technical levels for your risk. So assume that you got in, right? And let's say we're trading 1 DTE SPY. I believe my strike selection on Friday was 405. That's what I posted to Twitter. I post strike selections for upside and downside every day, usually. And and then we have a plan that we walk through, typically live, or I share with the folks live on Discord. But you don't need that because you've got the levels. So if you got the strike selections, you can kind of understand what I'm trying to do. So if you're on Twitter and you're not in the Discord, perfectly fine. You do not need to join the Discord. The videos and your study is probably enough to get you where you need to go. Okay. Let's say you got an entry here on one of these pullbacks. Great. Nice move to the previous close, holds the previous close, continues up. It does pull back to the ribbon, but that I'd still be okay with that. Like I'm still holding right at this point. It's a big move down, might scare you. It doesn't look like this when it's happening in real time. It looks like a big red candle to the downside, right? It looks like it's continuation, but it bounces off the 8. So if I was using the 13 at risk, never happens, right? Continues up, gets to the call trigger. Often you'll see if you start down at the put trigger, it'll, and it's inside the trigger box for most of the pre-market. Often you'll see a move at least to the previous close, if not to the call trigger. And often, the reverse is also true. If it's at, basing at below the call trigger, rejects the call trigger, often you'll get back to the previous close and then down to the put trigger. That happens more often than not. I don't know the statistics behind it yet, but I will get those as I work through the white paper this year. Gets to the previous close, rejects. Now we do end up holding, we do this double bottom, and then we recover the 48 on the 3-minute. This is a great entry right here again, right? And again, you can use 21 or 34 or 48 as your risk, or you can use this low here as your risk. So another entry there. And of course, if you're holding the whole day and you're still using, let's say this put trigger as your risk, this probably would have taken your premiums back to what you got them at if you got in here, right? Roughly. Maybe you would have lost a little bit, but it's 1 DTE or further. It shouldn't be that bad. If it's further, let's say 2, 4, whatever, it's going to lose less premium. So it wouldn't be as big of a deal. And you can see that actually here on the premium chart. You're still not out of the trade, even if you have a stop in place. If you had a 20% stop, you're still in the trade. If you're managing it actively, then, you can be scaling out here and then looking for an entry to buy some more, right? And as it recovers, this is a great entry for adding position, right? So if you got in here, scaled out here, scaled out here, scaled out here, then you can re-add position. Maybe you would have even added here, and I'll pull back to the 3-minute. You may have added at a higher price, gone lower, recovered, added some more. The ribbon is still green. It's still, generally moving in the right direction. This is a little bit sideways on higher time frames. You can see that we're in the trigger box, but eventually it breaks out, right? And we continue to hold this ribbon. We're continuing to hold the 21. For the most part, we're continuing to hold the 13. Nothing really should scare you out of this trade until we get to the point where we get to this higher high and this higher low, right? And this lower low after the higher low, right? And then we start to sort of shift structure, right? And it doesn't break this level again. That point, probably want to get out. And of course, you can be scaling out at each of these levels. So scale out here, add more here, add more here. Maybe scale out on resistance here, add more here, scale out here, pull back, add some more here. Maybe you scale out a little bit here. If you want to, you don't have to manage it that actively. You can wait till the next level. And then it basically gets to this point. You can, or, you don't have to scale out also. You can also just move stops, right? If that's something that's you prefer to do instead, right? As you break through some of these levels, you can move stops. If you move the stops here, you probably would have stopped out at some point with profit. And then you could have gotten back in, moving stops. Of course, once you get to here, you can scale out some more. And then, we have this big downside move. So what does that look like, right? So if you're entering kind of in the morning, let's say you're getting in at, let's say $1.70, right? Let's be conservative here. $1.70, you're scaling out at almost $3. So, maybe you're adding position at $2, maybe you're stopping out. Or if you're not adding here, you have just runners left. Maybe they pull back to the same price. You're still in them. If you don't have a trailing stop, maybe you add more position. Here's where we hit the 13 again at $1.70. So you could add it again, scaling out at $2.40, holding it all the way, and it actually would have been a double, more than a double, right? $3.40 goes all the way up to $3.70. Now I'm not assuming you're going to bottom tick and top tick these things. So let's say you even scaled out of levels, right? You're scaling out at decent percentage above where you started. And of course, with possibility for getting 100% if you got in a nice optimal entry of $1.70 here or $1.70 here. Okay, so that's the gist of it. I hope that helps you. I hope you understand how I'm scalping every day with SPX and SPY. There will be more videos, particularly with the time warp. I'll be making tons of videos on time warp. I'll be making videos on my whole system, a whole series on the system. There's going to be more videos on examples of how to do things. But the general concept is there. And again, I always urge you folks to go back and practice with the replay, practice with on-demand, whatever you prefer to do. If you want to just experiment with replay after hours, great. On-demand is not as good as a replay. It's a little kludgier, but it works. Or try it with paper trading during the day. That'll work. Of course, if you want to try it with your own account, that's up to you. It's your risk. But that's the general concept. I really enjoy the 1-3 SPX scalping, and of course the 3-10 SPY trading. And we do that actively every day. It's kind of my bread and butter. With mega caps as potential intraday or swing trades that I'll do as well. But that's it for this presentation. I hope it's helpful for you. And of course, if you have any questions, drop them in the comments below. All right, bye.